अपन यहाँ थोड़ा देखेंगे कि हम ये अप्रोच रखेंगे कि हम पहले जो 2 या 5 नंबर में डेफिनेशन जो पूछी जाती है हर एक शब्द की, जो हमारे टॉपिक और सब टॉपिक है सिलेबस की, उसको हम देख लेंगे। तो सबसे पहले है कि फाइनेंस किसे कहेंगे, क्योंकि हमारा सबसे पहला टॉपिक ही लिख रखा फाइनेंस। इन द कंस्ट्रक्ट ऑफ बिजनेस ऑपरेशन, फाइनेंस में बी डिफाइंड एज अ फंक्शन encompassing the management of monetary resources, including acquisition, allocation, and utilization of fund to achieve organization objective. This include the identification of funding requirements and procedural of capital, procurement of capital from various sources, the judicial deployment of the funds in operational uh, and capital expenditure, the oversight of financial obligation, and the strategic planning for future financial sustainability and growth. Then, what is the wealth maximization? A central tenet of financial management, wherein overarching objective is to enhance the total value of stakeholders' investment in the entity over the long term. This typically involves the strategic decision making regarding investment and financing the dividend policy aimed at increasing the market value of the country of the company and consequently the wealth of its owner and shareholder. Source of finance. It considers various avenues through which commercial entity obtain the necessary capital to fund its operations, investments, and growth initiative. This source can be categorized based on duration of funding, either long term or providing capital for period of over 1 year and facilitating capital expenditure and expansion. The short term sources catering immediate liquidity needs and operational expenses for period of 1 year or less. So, furthermore, they may classify by origin. First is the internal source, generating within the entity itself, or the external source procured from external stakeholder or financial institute. Then, what is the capital structure? It referred to composition of entities financing, especially the mix of debt and equity. Capital structure is mix of debt and equity utilizing to fund its asset and operations. The statistical determination of optimal capital structure is critical aspect of financial management, balancing the cost of risk and associate with the different source of capital and maximize shareholder value. Then come the what is the banking? Represent a sector of economy comprises institutional licensed to accept deposit, provide credit facilities, and facilitate payment transaction within the sector. Various category of bank exist, each with specified mandate and operational parameter. Then, what is the payment bank? The payment bank are entity established to promote financial inclusion by offering deposit and payment services, albeit with restriction on lending activities. They do not lend. Then comes the small finance bank, chartered to further financial inclusion by providing banking services and extending credit to underserved segment, the particularly in rural area. The banking sector play a crucial role in intermediate of fund and overall functioning of the financial system. So then the stock market. The stock market is a regulated marketplace wherein publicly traded securities, primarily share of ownership in companies' stock, are bought and sold. This market facilitated the mobilization of capital, providing liquidity to investor and plays a significant role in price discovery for corporate equity. Then what is the FII as mentioned in syllabus? Denote an investment made by entity and individual based on one jurisdiction into business enterprise situated in another jurisdiction with the intent of establishing a lasting interest, typically involve control or significant influence over the management of the foreign enterprises. Then the what is the FII? Investing in entity or funds that are established or registered in a country different from one which they are making investing. The investor typically participates in financial market of host country by investing in assets such as equity and bond without necessarily seeking the exert managerial control over investibility. Then comes the finance management. What is this finance management? Encompass various aspects including source of finance, both long term and short term, capital structure and wealth and profit maximization, cost of capital and distribution of profit. Then the need of finance is company required to objective. First is expansion and upgradation of their operation and meet immediate needs such as vendor payment, addressing potentially liquidity crunch. Then wealth maximization is also a it's a second thing. Then come the source of finance. Source of finance can be broadly classified based on the period over which the fund are required, long term and short term, by their source of the general, then internal or external. The long term source of finance. This source provide funds for a period of exceeding 1 year. Example, sale of fixed asset. Company can liquidate assets such as building or loan. Then come the issue of equity share. The company can dilute ownership by selling share. Issue of debt through bonds. uh, Long-term bond can be issued to raise capital. Then come what is the debenture? Debenture, these are debt instrument that typically involve regular interest payments. Debt instrument, regular investment payment. Some debenture may be convertible into equity. Issuance of debenture is subjected to guideline and generally restricted to company within stock credit history and institutional investor. Debenture are considered risky as they represent unsecured debt. Debenture unsecured debt. Then come the derivatives. These are debt instrument whose return value is dependent on underlying commodity based on the commodity and do not offer a fixed return. Retaining earning, this represents the portion of annual profit that not disturb as profit. Then come the short-term source of finance. This source provide funds for period of one or more. Example include working capital requirement used for liquidity management and day-to-day operational expense. Then come the short-term requirement. Utilize payment due to for revenue expenditure. Commercial paper. This is a short-term security issued by companies to raise debt, often sold at a discount to face value. Commercial paper are uh, uh, discount face value of 100 but sold at the 94-95 rupee. It has a fixed maturity period typically ranging from 91 to 364 days. Commercial papers is transferable. Then the what is the commercial bill? This arises from the trade between companies where credit is extended against the guarantees of invoice for goods and service. Guarantee of invoice for the good of service supply. Then come the classification as per source of generation. Internal source, owners fund. This include fund generated within the company or entity. Then come the external source, borrowed fund. This involves raising of capital from outside the entity. Then this what is the Capital. What is the capital? I can say this. What is the capital type of thing? Then is come capital structure. The capital structure pertain to way a company finance its asset through combination of equity and debt. Capital structure we learn before it. Debt generally has lower cost of equity than equity, and interest payment on debt are calculated before tax, while tax on equity is levied on the overall annual profit after dividend distribution. Then come the banking. What is the banking? The banking sector is crucial component of financial system. Import category of bank include are the payment bank, established based on the recommendation of Nachiket More Committee to enhance banking accessibility in unreserved area. Their function include underserved area, and their function include providing deposit facility up to 2 lakh. Payment bank like IBP or Paytm payment bank not allowed to grow, क्योंकि पेमेंट पेटीएम को खुद को ही लोन की ज़रूरत है, वो दूसरों को क्या देगा. सो स्मॉल फाइनेंस बैंक conceptualized by the Nachiket More Committee with the objective of providing banking service in unserved and rural area. Small finance bank, unserved and rural area, extending credit to marginalized farmer, small industry, and women and rural enterprises. Their functions are similar to commercial bank within certain limitation, such as 50% of total loan should be given amount less than 25 lakh, and 25% of their branch should be in rural area. Then come the what is the non-performing asset? A loan generally given by bank that has stopped earning or generating interest. Academically, it is any loan account for which principal or interest due for 90 days, or in case of agriculture loan, the due duration is one crop cycle or two crop 1 year your two crop cycle. Here is two crop cycle, sorry. NPA are categorized based on the duration for which the loan is overdue. Processing from special mention after NPA, it gone to SMA1, SMA2, and SMA3 category, then substandard doubtful, and finally loss asset after 26 months. Then come the insolvency bankruptcy code. It is adopted in the 2016. It in comparison chapter for method and process to deal with recovery of creditor due against various financial and non-financial institutions. It involves the self-declared inability to pay due and court accept the insolvency. So two type of court handle the IBC matter: the National Company in Law Tribunal, and the for the companies and limited liability partnership, and debt recovery tribunal for individual and the partnership. Then come the loan waiver or loan warranty. A loan waiver signifies a bank completely discharging the debtor from past due, often based on the government instruction and financial support, because of the financial support of the government. And the loan write-off is financial practice adopted by banks to reduce their tax liabilities by transferring overdue loans out of their balance sheet. So what is the haircut? The difference between the actual amount due and the actual loan recovered after legal process. What is the priority sector lending? A rule mandated by Reserve Bank of India to ensure adequate flow of organization credit to vulnerable section of society. The current list of priority sector include agriculture, MSME, export credit, education, housing, and social infrastructure, renewable, and current PSL, very different type of bank. Then what is the fraud correct reaction? A protective mechanism used by RBI to identify and rectify bank facing the threat of default in near future. The banks under PCA may face restrictions such as limitation of opening new account branches, giving new loans, and potentially having board of director taken over. Then come the uh, issue with Indian banking include the small size and absence of big bank. A remedy is the merger of bank and lack of professionalism due to political interference. Corruption and sociological approach to banking and lack of service standard, a remedy being the RBI ombudsman. Then the what is the domestically systematically important bank, the DCIP. These are large banks whose failure would have a significant negative impact on economy and thus require more stringent supervision and support. So currently SBI, ICI and HDFC are classified as DC. Then comes the digital payment. The mechanism in India, this operate under the purview of National Payment Corporation of India. So the RBI encompasses the system like UPI, IMPS, NEFT, and RTGS. Then come the what is the asset reconstruction companies or the bad bank, financial institutions specializing in resolving insolvent or the bankrupt loan account through managerial and judicial process and executive process. Also the muscle power, the national asset reconstruction company is a governmental sponsored ARC established to resolve loan up to 500 crore. Then come the microfinance. This is peer-to-peer lending. Then the stock market. The stock market facilitates the trading of the share and security. Then come what is the FII. The both are foreign instrument. FII refers to investment made by company or individual from one country into business interest located in another countries, typically involving control or significant influence over the foreign entity. Then come the foreign institutional investor. These are investment fund or investor registered in a country other than the one which they are investing, and they typically investing in financial asset of countries such as stock and bond without necessarily seeking the control